So.
But now I need a refresher.
Let's do it.
I don't want none.
Good morning.
Good morning.
Good morning.
Good morning.
How we all doing?
Good.
It is March 27th. Our year is 3 months over.
Yeah.
3 months gone.
Yeah.
First quarter is just gone as of next Monday. Who's on track? No one. Stacia.
I just
Stacia's
need them
on
all
track.
close. I need your plans to close so that I'm better on track.
All right. Well, let me go for my morning jog. Good.
That's awesome.
That don't wake you up.
All right. On-time drawing. The odds are good this morning. And this is an on-time drawing.
Hold me on the spot when we're doing I tried sneaking in.
We'll give you number 10.
I didn't sign in. Was I supposed to sign in?
He's been sitting there forever.
We'll give you number 11.
He was here.
Number 11? Okay.
Number 11. I'm feeling generous this morning.
What a lucky man I am.
Oh, see?
And she's been here a while.
Yeah, well, it's busy.
All right.
I was just writing.
Here we go. Number
Oh my God.
11.
What did I win? 50 lashes at the whipping girls?
I know.
That's awesome.
you won a bunch of stuff.
Oh my God.
Stuff.
Marketing
There you
stuff.
go.
All right, thank you. I feel so privileged and blessed.
What, is this your first meeting of the year?
Yeah, actually, I think it is.
Oh, wow.
It's just not there, is it?
it? It's a godsend.
All right. Make sure you take pictures throughout and then go on Facebook and check in. Tag me, tag others, but just do it. Our breakfast sponsor this morning, one of two breakfast sponsors, is Stacia with Old Republic Home Protection.
It's a small.
Wait. Stacia.
Good morning. I wanted to, last Thursday when we were here, it was the first day of spring, and today feels like it's summer. And so if you didn't pick it up when you walked in or signed in, grab one of these. It's just, if you didn't know, as of January 1st of this year, the EPA has changed standards for refrigerant to go into again. And so there's still systems out there with R22. There's lots of systems out there with 410A. And home warranty companies as a whole, we're always gonna probably repair before we replace. I mean, we're not in business to be like, oh, every AC that has a breakdown, we're gonna replace. That's, a $16,000 system for $700 is great return on investment, but it's not very realistic. So know that if whomever you go through, they're gonna try and repair first. Know who you're using. So Old Republic Home Protection on every single one of my plans, whether it's the silver, the gold, or the platinum, includes the cost of refrigerant on a covered repair. So you're not paying $20 a pound, or we're not covering just $20 a pound or $10 a pound or $700 handling fee. We're covering the cost of refrigerant on the repair.
Is there a limit to how much refrigerant that includes?
There is not.
Okay.
So the average repair, depending on the size of the system, is 5 to 8 pounds, and we know that. But there's not a limit. It's just that if it's a 2-ton system, it's usually around 4 or 5 pounds. Where if it's a 5-ton system, it's closer to 8 or 10. So, but we have no cap on the amount of refrigerant. We have no cap on the number of AC systems. What we do limit is If it has to be 5 tons or less, anything over 5 tons is considered commercial. But some of the verbiage that's important, and so if you don't have this, grab one before you leave because it's just important. And on the back side, it's gonna list. So our silver, like I say, is gonna cover, and I have to take these off so I can read, the system and the cooling components. But then there are a lot of non-covered costs that aren't covered in that silver, whether it be permits or code upgrades or carpentry modifications. And so the higher you go on the plan, the less out of pocket your client's gonna experience. So it kind of gives you a highlight of what we're gonna cover depending on the plan and what we're not gonna cover, because it's not the system. Like I had somebody the other day call me, and this is I'm going off, but they have a pool and a light went out in the pool, and he's like, my people called in and you denied the claim. We cover the systems that affect the function of whatever that mechanical system is. A light doesn't affect how the pool runs. It's inconvenient to not have a light. You typically have to drain the pool so you can pull it out, but it doesn't affect the function of the pool. Just like smells and noises. We don't cover smells or noises if the system is working. So if garbage disposal stinks, figure out a way to clean it. If the refrigerator is beeping because there's a bad sensor in there, but it's still cooling your systems, we're not gonna cover that. And it frustrates people if, you know, to hear a denial, but those are just not part of the functioning of the system. So same with AC. It's important to know, we never cover the line flush. I'm not sure why, because if you replace refrigerants in a system, the line has to be flushed to make sure that there's no debris in it, but we don't cover it. It's nominal, it's typically under $150, but that's gonna be an out-of-pocket cost that any policy holder with us has. Nobody yet of any of my competitors have any verbiage on the A2L and what they will replace. So in most cases, even last year with my plan, if your AC went out and we replaced the AC, but it wasn't compatible with the furnace, we wouldn't cover the cost of the furnace because it didn't fail. This year, with the wording, if it's no longer compatible, we won't cover the cost of labor on changing out the furnace, but we'll cover the furnace because it has to be compatible in order for the system to work. I'm not aware of anybody having that verbiage yet in their plans, so just make yourself aware of that when you go in to show a home, and maybe you're showing a home that is, you know, has a 20-year-old system on it. It's highly unlikely that the furnace is going to be compatible with a brand new air conditioning unit, and furnaces cost less than ACs. But if your client maybe doesn't have an extra $2,500 plus labor, you just might want to consider writing us in over somebody else, giving us a try, because it would save them more money in the downline. And that's really what it is. And if you can be the hero on that, just make sure you're looking at the fine print, the maximums, the max payouts, the limitations, what they do and don't cover. Because although it's very great to be able to pick up the phone and call your own person maybe and have somebody come out, if the max payout they'll ever pay on an AC at a retail value is $3,500, and ACs are about $16,000 right now,
Right.
for like a 4-ton system on a retail site, $3,500 is a great deal off. It's a nice coupon, but there's still a lot of money there on the table that, you know, especially if somebody's just closing a house a few months ago, that they might need to finance now because they can't. The average person probably doesn't have $12,500 just sitting in their back pocket waiting for their AC to go. And that's still an after close call that you might get and somebody not being happy. So just go over, you know, don't go over those details. Refer them to me so that I can have that conversation. I can be that person that says, hey, I don't know who you're considering, but know this, know this, know this. And then they can choose, and when they make the choice, the informed choice on their own, it's harder to pick up the phone and call you and say, my AC went out and I've got a $12,000 bill. Because you didn't tell them what to do, but I know from my end, if they had the opportunity to speak to me, that I have fully informed them on what I know and what I'm aware. And I am just very honest, because the last thing I want is them calling you upset, you calling me upset, and I can't help you because we don't cover what we don't cover. And so The $650 is the gold, $800 is the platinum. That $150 difference can save your client thousands of dollars. So, and they can add or upgrade for up to 60 days from close of escrow. So maybe they've scraped everything together for that $650, but 45 days down the road, it's easier to come up with that extra $150 to upgrade, and because they've had a paycheck or two along the way after they've had their first mortgage payment. But please reach out to me, ask me questions, drill me, ask me for scenarios so that we can just make sure that we're all on the same page. And if you aren't working with someone that you like, trust, and have confidence in, I would love the opportunity to sit down, talk to you, earn your business, or at least educate you on what we might do differently. Thank you so much.
Thank you. All right, upcoming Zoom. Zoom is starting up again. April 2nd is, that's next Wednesday. It is next Wednesday. And then next Friday is Your Database is Your Business. I'll be teaching that, so on and so forth. Food truck out there every Thursday. What do they have? What is this food truck even called? Four Corners Food Truck. Look at this menu. Lumpia in a cup with sweet chili. The B&B tacos. I don't know. It's an interesting menu. But they're out there from 11 to 1. Blood drive coming up next Monday. They're in need of blood. I will try and give. I'm taking blood thinners right now, so they keep rejecting my blood. Imagine that. So anyway, but it is next Monday. We have a 3-hour CE class coming up. It is going to be next Wednesday, April 2nd, from 11 to 2. John Morgan is the instructor on that. If you need some education, or if you just need some CEs, there it is, next Wednesday from 11 to 2. Next week, that's too big. Our meeting is going to be about some of my favorite tools that we provide. It's come to my attention that not a lot of agents know about the tools that we provide. If they know about the tools, maybe they know about them, they don't really know how to use them. So there's 2 or 3 of them that I'm going to dive deep in and show you guys what they are and how to use them. All right, and this is like in May 15th from 9 through. Who knows who John Story is? None of you. Anthony does. So John Story is a coach, a national coach, and some of our agents use him with great success. Years ago, when I was coaching an agent. He was in Phoenix market, and he was also being coached by John Story, and so the two of us ganged up on the client. But anyways, John Story is really, really good. A lot of social media stuff. So he's going to be at the Summerlin office May 15th from 9:30 to 11:30. So it will take place of, maybe we won't have a meeting that day. I'll have to check with the boss. So, but I highly, highly recommend going and listening to John Story. Any questions? All right. So I wrote up a little thing, and I gave it to Stephanie to post in the newsletter. And she goes, I'm going to run this through ChatGPT to see if, and they changed it up just a bit. So, but anyway, here's what ChatGPT says. It doesn't really sound like me, does it? It's essential to understand that a BBRA is not needed when you're showing your own listing. We all know that, right? If we have a listing and we have somebody that wants to see it, we don't need to get them to sign a BBRA. We're all on board? However, if that buyer wants to buy that house, then you need a BBRA. Okay? Any questions on that? Everyone already knew that? So I'm making a big deal about nothing.
It's pretty basic, isn't it? I mean, when you write up a purchase contract, a broker buyer agreement is mandatory.
It was never required before the settlement.
See, it wasn't, it is in California.
Yeah, it was in Utah as well. All right, let's talk about some stats. So active listings as of the 24th, 2 days ago, it was there was 7,999 active listings, of which 5,550 of those were single family. Under contracts 3162 and solds is 2541. That puts our month's inventory at 3.1. We're still kind of in a seller's market. Kind of. I mean, we're still dealing with some multiple offers out there, kind of. We're kind of transitioning, and it really all depends on what happens with interest rates as where we'll go.
Yeah, but even the home builders are starting to drop prices.
Yep. Let's compare it to a week ago. So active listings a week ago, 7,908. So it did go up a little bit. Under contracts and sold last week. Wrong way, 3150 to 3162, pretty close, 2540. Solds went up, and that's why the month's inventory went down a little bit. So you can grab this and put it on your social media so that you show everyone out there that you're the expert, or you can, just remember the stats and use that when you're working with buyers and sellers. So those are the stats for the week. Any questions? All right, with that being said, we are going to learn about 1031 exchanges today. Yes, that's what we're here for. Not here to hear me drone on argue. So we have Sara Remley. Sara has been here several times before and has a wealth of knowledge and information that she wants to share with us. So with that being said, welcome, Sara.
Thank you so much. I so appreciate that. See, that's the magic touch right there. Yay! Oh my gosh, you know what? We're already ahead of the game. Right there. I was telling Mark, I don't worry about anything except for the tech. Good morning, everybody. Thank you. And thank you so much for having me, Mark. I really
Absolutely.
appreciate it. Good morning, everybody, and thank you for your time. I know how valuable it is. You've heard this joke before, but Mark, I've been licensed in several states previously. I often joke I'm a recovering broker turned tax nerd. I'm on the dark side now. But the point
That's right, they hear my jokes over and over every week, so.
Well, you've heard mine a couple of times, so it's fresh material on the other side here. But my point in that is that I'm not here to turn you into a tax nerd. It's really about adding value to who you are, right? Broadening that knowledge base and hopefully adding some new information that allows you to build your business. 1031s are all about building business. So, I am a salesperson. That being said, this is literally the most important information of the day. It's my phone number. You can laugh at that, but it's true. Because we're going to talk about a lot of information today, and I don't want you to feel overwhelmed. Hold on to my phone number. Put me in your phone as 1031 Sara. And I'm not really joking about 30% of your market here in Clark County is driven by investors. So if you haven't worked on a deal that included a 1031 exchange, or it's been a while, right? There's an absolute inevitability. And if you have me in your phone as 1031 Sara, you will always have that resource when it comes up. That's my cell number. You can text me. Don't text me after wine at 8 o'clock with a unique scenario. I'm like, nope, we're gonna talk about that one in the morning. People get a little too creative. But my point is, I'm a free resource for you. Reach out anytime you have a question. I was actually last year in the grocery store doing my little self-out checkout, boop, 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 and behind me I hear, hey, 1031 Sara. I thought, oh man, my marketing is saturated. But it was really kind of a fun moment. It was an agent who lives in my neighborhood who'd been in a class recently. And the reason I say that is you'll remember me if you have that information. If you can't ever get a hold of me, call my office. My team is absolutely amazing. I love the feedback you gave Kenneth as we were chatting before the meeting started about how smooth your last 1031 exchange was with my team. And that's the whole point. The information I'm gonna give you today is how to apply it to grow your business, how to answer some of those foundational questions and feel comfortable with that. But it's really about, I think of all real estate as a team effort, right? It's a group effort. I'm not a broker, right? We're gonna guide your clients through the 1031 process, and you're gonna be out there selling them real estate, right? And hopefully guiding them through the buy process as well. So, when I talk about the intermediary, I think Brent asked me an interesting question. I think you asked me if I was actually the qualified intermediary. Was that the question you asked me, Brent?
If you actually worked as the accommodator.
Right, and so there's multiple terms, and I love that question because there's some confusion out there. The accommodator, the qualified intermediary, you'll hear some people call us a QI, right, or just the intermediary. All of those terms are interchangeable for who we are. We are a neutral third party. We work at the escrow level solely to manage the 1031 exchange. So all of those terms are interchangeable. And yes, IPX 1031 is an intermediary. We're actually the largest, most secure in the industry. IPX 1031 is a wholly owned subsidiary of Fidelity National Financial. So when we talk about being the source of the source in an unregulated industry, that's really an important consideration. And by unregulated, I mean we're holding all the money and nobody's watching us, right? You remember Southwest Exchange? Okay. I always have to tell the cautionary tale. Is anybody else selling real estate in Las Vegas, 2008, 2009, Southwest? I call it the Southwest Exchange debacle. But it was actually a planned criminal act, and it was so impactful to the state of Nevada that the state of Nevada added additional security legislation for intermediaries, okay?
That was just in Nevada?
So every state, we're gonna talk smack about California. Are you from California, Brett? Okay, awesome. We're gonna talk smack about California. Every state recognizes federal 1031 code,
Right.
but a state can add its own layer of legislation or additional security. And Nevada requires what they call the qualified trust, which is an additional layer of insurance for an intermediary. What that means to you
Got it.
is that when your client is selling a property in the state of Nevada, you have to use an intermediary that meets that additional financial requirement, okay? I'm gonna tell the Southwest Exchange story. So when I say planned criminal act, and we're talking about an intermediary in an unregulated industry, we're talking at the time, so we're back in late 2008, Southwest Exchange is holding about $110 million, okay? The largest qualified intermediary in Nevada at the time. When your clients open an exchange, Kenneth, their money went into a segregated account, so a separate money market account. What these four owners did was they moved all the money from those segregated accounts into their general fund. I know, Brent already knows where I'm going. I'm going offshore.
That's big.
Exactly right.
Big no-no.
So we put all the money so when I say planned criminal act in an unregulated industry, think about who you're referring.
That's intent.
Yeah, absolutely. They all wired all the money offshore, and all four principals left on different red eyes. Exactly, sir. And Mark, it was interesting.
Was Hillary with him?
Well, not too long ago, I had someone in the class who was like, I actually lost money. It was a broker. And they said, I actually lost about $500,000. I think he said it took him 6 years, and they got part of it back through that bond that they had, which was minimal. So think about how impactful that is to the state of Nevada in the throes of that recession. $110 million gone. And your neighbors that lost their money, they still had their tax liability. The IRS does not care. And so that's so impactful because I'll do a consultation with your clients. Exchanges with IPX, we are a flat fee of $1,000. We are a volume, I'll charge your clients more, Brent. We are a volume business, okay? We are a volume business. Exchanges are $1,000, but I'll do a consultation and your client sometimes will call me back, bless the internet. We're gonna talk about ChatGPT too. and they'll call me back the next day and they'll be like, there's this dude on the internet who'll do it for $500. I'm like, I bet there is. Okay. I don't even trust people on Twitter. So we wanna be careful when your clients are using an intermediary, who they're using. This is really foundational to who you're referring and understanding how that business, how our business actually operates, okay? So this looks like a lot of information, and again, my phone number, that's all that matters today. Hold on to my phone number. But it really is about the conversation. This is some of the topics. I see you look already intimidated, Brett. We're gonna talk about essentials, we're gonna clarify like-kind. Okay, I think I answer the like-kind question every day of my life, except Sundays when I don't answer my phone, because it's such a pervasive myth in real estate. We'll talk about building your business, investing, and then we're gonna talk about how your clients are buying that future primary, what's driving our market with investors. And I can tell you most of them, we call it a dream home strategy, by the way. What's really happening is that investors are coming from other states doing exchanges, and what they're doing is they're actually buying a future primary home for themselves, right? Their retirement plan is to come into Nevada. So how many in the room have worked on transactions that involved a 1031 exchange? Probably about half of us. Okay, awesome. So I haven't done this before. You're my beta group, Mark. But I thought it would be interesting to kind of start the conversation talking about some of these foundational items that we're not sure are true or false in exchanges. A lot of the calls that I get are really people just clarifying misinformation, right? I also have people, like we all do, using ChatGPT. You guys are subject to it too, right? I actually had 2 clients on the same day last week where I emailed them. We send like an outline when your clients wanted to start an exchange. We say, this is how much it is, here's some basic regulations or rules about it. Both of these individuals took my introductory email, copied and pasted it into ChatGPT, and then what they did, they copied and pasted what ChatGPT told them and sent it back to me with a question that said, is this right? And I thought, we're using AI wrong already. Okay, that was my initial thought. I was like, what the heck? Well, yes, the information I sent you was right, and what you sent me back was accurate. And literally all ChatGPT did was make the bullet points bigger. Okay, that's all it did, was make like the little arrow bullet point bigger so that their eye went to that. So I thought that was fascinating. So let's just kind of go through this. I think it starts some conversation, and don't be afraid to ask me the questions, right? So the exchange agreement, and by this I'm talking about an exchange contract, would need to be in place before the close of escrow on a property being sold. Those of you that have done exchanges, true, right? Okay. And this is important because I get calls sometimes and people go, oh, I just listed the property and I need to open an exchange. Nope. We open an exchange once you have an accepted offer on the property you're selling, right, Kenneth? Before that, we're in those planning stages, okay? Do you have a question already, Brent?
No, I'm just listening intently.
I told you I was gonna pick on you.
You can get me all you want. I'm an easy target. I can take it.
When we talk about a partial exchange, that's someone who doesn't spend all the money or buy something less than what they sold. It does not invalidate a 1031. It's just called a partial 1031. We'll talk more about that. Vesting, we're gonna talk about vesting a couple of times today, What I have up here is the taxpayer that holds title to the replacement property is the same taxpayer that held title to the relinquished property. That's accurate. And taxpayer, it's the taxpayer who reported ownership and income associated with that property, okay? We'll talk about the LLCs and we'll talk about a trust as well. There are no extensions to the 45 and 180 days. Those of you that have done exchanges, you know those are hard and fast dates, right? The only exception mark are actually federally declared disaster notices. So for example, LA County right now has a federally declared disaster notice in place because of the recent fires, okay? That extends everyone's filing deadline who either lives in LA County or does business in LA County, and that applies to 1031 exchanges as well. I'm gonna skip that one. Again, you're my beta group on the true and false, and then we're gonna start, guys. I wanna get through this really quick. We talk about during an exchange, the money that we're holding can only be accessed for an earnest money deposit. That is absolutely accurate. Once we're holding money, we can only release money for an earnest money deposit and or for the closing, right? A multifamily property in California can be exchanged for an industrial property in Nevada. Absolutely, that goes to that foundation of like kind, right? You and I both know how false that is and how pervasive it is. A lot of folks still ask those questions. I actually had someone's CPA, remind me of your name. Richard, that's right. I was gonna say Rick, and I was like, I know that's wrong. Richard, nice to see you again. I actually had someone's CPA recently tell them, if you sell a townhome, you have to buy a townhome. And that is fundamentally wrong. Wow. Again, we're gonna talk about like kind. It's such a pervasive, yes. So you would be amazed at the knowledge gap with CPAs in 1031 exchanges. CPAs have a much broader knowledge of tax code than me, right? They're filing experts. I'm an expert in a specific aspect of the code. But yeah, we do a lot of consultations with client CPAs who aren't quite sure, and there's a lot of nuance in 1031 code as well, okay? The 1031 or the qualified intermediary can be your attorney? No, we cannot be your attorney. We're drawing up legal documents. We hire a lot of attorneys, right? Some of our exchange officers are actually attorneys that you work with. I'm not sure if you worked with Jeff, Kenneth. But your attorney cannot be your intermediary. Just like escrow can't be your intermediary, right, Brent?
I know, I was thinking to myself, heck, if you could be intermediary and attorney for $1,000, I'll hire you. That's what I was thinking.
We are an amazing resource. We are an amazing resource. The accessibility that I have to our general counsel is unbelievable. I have a client ask me a question, if I'm not sure or it's a really complicated scenario question and I want to unwind it, I can immediately call an incredible resource. And think about that as a free resource for your clients. We can't counsel your clients and we're not your client's CPA, but we have an amazing resource base when it comes to the aspects of 1031 exchange, okay? And I'm gonna back up just quickly. For those of you that haven't done a 1031 exchange, or maybe there's kind of a knowledge gap there, when I say 1031 exchange, I'm talking about your client selling an investment property, right? A rental property on the corner, for example, deferring all of their taxation associated with that sale and reinvesting 100% of their equity in the replacement property or properties that they're going to buy. 1031 exchanges are about wealth building. Think about how powerful that leverage is. If I can leverage my equity, 100% of it over and over and over again, I can build a pretty significant portfolio, right? Think of tax deferral, when I say 1031 exchange, as kicking a can down the road. Yes, Richard?
I do have a question for you.
Yeah.
So, can somebody that has an ITIN number do a 1031 exchange?
Yes, absolutely, yeah.
It's tied to a taxpayer, whether it's an EIN or a social security.
So what we're talking about is someone who's subject to FERPTA withholding, I'm assuming. Potentially, no.
Not necessarily, but yeah.
Okay, Well, they have to have some tax identifier to be able to do a 1031
Well, that would be their,
exchange.
that would be their.
Exactly, right. And when I think of ITIN, I'm thinking of a foreign investor.
Uh-huh,
So think of someone who's subject to FIRPTA.
okay.
We work with a lot of foreign investors, and I can still take advantage of 1031 code, right? I can still kick that can down the road. When we get to the value component, right, when we think about FIRPTA, FIRPTA is a withholding. Think of withholding as the government saying, show me the money up front, okay? Because a foreign investor, they want insurance that they're gonna file, right?
Correct.
So withholding is just like, we're gonna hold a little money up front, and when you file, maybe you'll get some of it back, right? But when we
Has that-
tie that with,
Has a limit, I think it's what, 350,000 above transactions?
so
Or does that
300, so in our world, so, and remember, our world is specific to 1031. There's a point break of 300,000, and if the buyer, so if I'm selling something under 300,000 and the buyer is gonna occupy that home as their primary, that actually waives my FIRPTA.
Uh-huh.
Anything over, I'm subject to it, but I thought it was still 300, if that's changed.
I'm not too sure.
Okay, and maybe that's changed.
Okay.
This time of year, there's a lot of changes when the government's kind of working on things. I think we still have everything that we put out at 300.
300.
But when we talk about value for value, this is a really important concept because it's the same idea as seller financing. If I have a withholding, so if I sell for 500, and you know, you're an experienced agent, you have to buy for 500. Well, if title withheld 15% of my proceeds, I need to have the cash out of my pocket to replace that on the buy side, right? And then we remind that client, well, when you file that withholding, think of it as circle, right? We'll come back to you, hopefully part of it will come back to you. Seller financing is the same concept. If I say I'm willing to be the bank and I'm gonna take a note, right? I need to replace the value of that note in the buy side of the property that I buy, right? Same concepts. Mark, did you have a question? And
You did say that 100% needed to go. Does it have to be 100%?
I was talking about cash.
No, when they sell their property,
Yeah.
you said 100% would need to go to the intermediary. What if they only wanted to put 80%?
They can do that. That would be a partial 1031 exchange if I'm gonna retain cash. And they have the option to do that. Partial exchanges are very popular. I love the question. Because what your clients are asking me when they call and they say, I'm selling a property for $500,000, but I wanna put 50,000 in my pocket, is I think what you're asking me, right, Mark?
Yep.
Yes, they can do that. They're gonna pay tax on the 50K, right? When they ask me that question though, Mark, I have to ask back, what's your basis? Because if your basis is 450 and you're pulling out your gain, there is no deferral. Because you're not reinvesting above your basis. And so, well, you're jumping ahead, you're always ahead of the curve, so.
Yeah, that was my,
let me
that was
get
my
back on
question
track.
is
Yes,
it,
Brent.
is if you buy a house for 450, you sell it for $1 million, you put 550 into an accommodation, right?
Nope. Well-
You put the whole million in, but you wanna take out 100,000, right? Does it go against that initial investment of 450, cause that's not taxable, right?
Of course it's taxable.
That 450 is taxable?
Well, because,
The initial
hold on
investment,
a
that's-
second, hold on a second, Brent. First of all, you're 5 slides ahead of me, and I love the question. But what you're asking me 2 separate questions, okay? You're asking me about a partial exchange,
Right.
and when we talk about value within the context of 1031, we're talking about the full million. And if I don't buy, I can get taxed on debt relief, because the context is 1031 exchange. There's a different math if I'm just selling my real estate and divesting out. Okay, I'm not
Right, yeah,
taxed on my
cashing out,
basis. But that's different math than a 1031 exchange.
So 1031 exchange,
Well,
it doesn't,
let me
it
get
doesn't
ahead,
matter
let me
if
get a
it-
couple of slides down let me get actually started on my presentation. Okay, so when we talk about exchanges, there's a lot of different structures of 1031s. I'll come back to you, Brent, we just can't have a one-on-one conversation. And we need to get to the point where we're talking about value, because otherwise everybody else in the
Yeah,
room
I
is
know,
lost.
I apologize.
So when we talk about exchanges, there's different ways to approach and structures of exchanges. Most of us, like Kenneth, your client was using a delayed or forward moving exchange, right? I'm selling property A and I'm buying property B. Did they do a complex exchange?
No, I had a listing and it was a buyer, called the member, wasn't represented. So I double-ended it, but they already had a 1031 exchange.
Oh, okay.
And so they paid cash for the listing and had a little bit extra in the account or something.
It's called boot.
Oh,
Yeah.
okay.
So never mind, that wasn't a good example. I thought it was your listing that
It
you
was my
had sold,
listing,
but
but it was
then
my
maybe you had
buyer's.
the client as
Yeah.
well. So, but it was a forward exchange is my point.
Oh, okay.
Okay, your client who bought that house or the other client, they sold property A at
Right.
some point and they
Yeah.
bought property B,
Right.
your listing, right? That is a standard delayed or forward moving exchange. The next type of exchange is a reverse 1031 exchange. We're gonna talk more about this today and dive into it, but these are structures where you can sell your client the replacement property first. There are a lot of different structures within the 1031 world. A lot of agents, when I say thank you for your time, it's really valuable to come to a 1031 class because a lot of agents learn this foundation of sell, buy, 45, 180, and don't ever expand their knowledge base with all of these other ways to approach it. And the reason it's important to have those strategies and what I call your tool belt is because if you go to a listing presentation or you're out showing somebody property and they say, this is what I wanna do, you'll have some solution for them or some idea to get that sale. We can do build to suit, and this is kind of the deep and reverse build to suit, but I don't wanna get too lost there. So, let's talk about the process in general, okay? So this slide, did you have a question when you were, okay, I wasn't quite sure. So, what was your name? Leanne, nice to meet you. So when we talk about 1031 exchanges, this forward moving process is pretty straightforward. I'm selling property A, this is what we call the relinquished property, right? I have a time frame in between that starts from the close of escrow of the property I'm selling, okay? I have 180 days to accomplish the purchase of what I'm gonna buy. Okay, I can sell one and buy three. Okay, I can sell three and buy one, so I can consolidate, I can diversify. I've seen people sell one and buy 12.
So you can do an apartment. If you are one single family to do a 1031 exchange, you can get an apartment complex,
Of course, when you say get an apartment complex,
exchange it to an apartment complex.
what are they selling? They're
A
selling
single
an
family.
investment property?
Yeah, it's an investment
Absolutely. Real property for real property. Great question. Yes, absolutely. We're kind of, we're not there on like kind yet, but that'll clarify. But yeah, absolutely. It's about intent of a property being held for investment purposes, right? So, I want to get into the guts of it so we can talk smack about California with Brent.
Yes.
Okay.
Oh, Jesus.
When we talk about deferral, now we're not talking about the rules yet, Brent. We're not talking about value for value yet. We have to understand taxation on real estate to understand deferral, okay? And again, when I say deferral, I'm kicking a can down the road. But we have to understand how taxation works in real estate, right? When I say tax deferral, I'm talking about someone selling an investment property, and these are the layers of taxation that they're going to defer when they do a 1031 exchange. First and foremost, capital gains tax. We're all familiar with that right off the top. 15 to 20%, depending on bracket and filing status, okay? Depreciation recapture. Is that familiar to anybody?
No.
Or had a client deal with that? Richard, did you have a client deal with that before? No? No, when they bought down in value? No?
No.
Okay.
You get a scheduled write-off just like you do on,
So when I talk about depreciation, there's a little bit, and by the way, most of us never deal with that aspect of selling and buying real estate because most of us are only ever selling and buying our primary home, right? When we sell and buy our primary home, the exemption, the 250 exemption, and the 500K exemption, you will hear me refer to that as the 121, right? That's the code number, the 121 exemption, my primary home. Most of us, whoever buying and selling our primary homes, we're not aware of depreciation recapture because it's encompassed in that entire exemption, okay? Your investment property owners have a different formula because there is no built-in exemption on gain for them. So depreciation is like a double-edged sword. So every year when I file my income tax and I essentially check that box and I'm taking that credit for depreciation, right?
Yeah.
It doesn't say on the form, little parentheses, by the way. When you go to sell this property, we are going to recapture 25% of that as part of your tax formula. And the way that it applies in the formula is that as I take depreciation, I'm actually reducing my basis, okay? When I reduce my basis, I'm increasing my gain, okay? My taxable gain. I see your wheels turning, Brent.
No, I
Give me a minute.
understand this, but I was gonna try to make it a little bit more understandable for other people, because I don't think everybody understands what the depreciation schedule is.
Oh, please, go ahead.
Alright, what a depreciation schedule is cause I go through this a lot with California where home values go up really high, right? And they got more than 500,000 profit, right? So they could go to their tax guy, and their tax guy takes the 20 years of a depreciation schedule of the value of the home, because the home deteriorates, as far as the tax code is concerned, right? The home itself deteriorates as it becomes older. So they decrease the value, it decreases the value of the home, which they call it a depreciation schedule, and that is an actual part of the tax write-off to reach that 500,000 net that's tax-free.
Okay, so Brett, this is a whole nother class, so let's.
No.
The next layer,
But
the next
it's
layer,
being applied.
that's a
Certain
very
amount of time here.
complicated explanation of depreciation, Brent.
But it's being applied, it can be applied too in this, I never knew
Let me
that.
get through the next
All right,
couple of
apologize.
information, okay?
All right.
The next layer of tax deferral is net investment income tax. If I'm in a tippy top tax bracket, okay, if I'm paying 20% capital gains, I'm also getting hit with net investment income tax, okay? Here in Nevada, we don't have state tax. California clients are subject to California state tax as well, okay? When we talk about taxation, we're talking about your clients being taxed from their basis to their gain, okay? Does that make sense, everybody? Basis to gain. This is a really simplified example of how to calculate a basis, okay? Most of your investment clients that are selling and doing 1031 exchanges have not done capital improvements. Their basis is generally just their purchase price minus whatever depreciation formula they've applied, okay? So in this example, I've got a purchase price of $1 million, okay? I made capital improvements of 200,000. Capital improvements are something that significantly improves the value or increases the value of that home, okay? Pool, bedroom, garage, not carpet and paint. Those are expenses related to maintaining real estate, okay? In this formula, you see I have that accumulated depreciation removed from the formula, or it's a subtraction, right? So in this example, my adjusted basis, and that's a very important term, is 1.1 million, okay? If I sell the property for 2 million, I'm taxed on 900,000 of gain. Does that make sense, everybody? That 900,000 is what all those layers would essentially apply to, okay? State tax, okay? Here in Nevada, we can safely estimate your clients that are selling investment property that their tax liability is about 25%, okay? That's that combination, capital gains, depreciation, recapture. Your California clients, those folks that are coming here and relocating their assets, they're at 35 to 50% I've seen folks come out of California at a 50% tax rate, right? So when you think about what's driving our market, if you look at demographics and you look at this map, there's a very clear picture. Saturated markets, Texas, Florida. A lot of folks are still actually calling me about Tennessee, Mark. It's a so think about that. If I'm in a high tax environment and I wanna relocate my assets and maybe I'm gonna retire, I'm gonna do that through tax deferral. I wanna exit high tax environments with as little liability there as I can. I see your question for me. Give me a minute.
No,
Okay.
no.
So
I'm
when
just, I'm paying attention.
when we talk about the basis, okay, were you a CPA, Brent?
No,
Okay.
I try to be a
So-
skilled realtor.
Okay, so when we talk about a basis, if I say basis, okay, all of you have a basis in your primary home if you own your primary home. Mark, if you bought your primary home for $500,000, and let's just say that's your adjusted basis. Maybe you've only owned it for 2 years, right? And you're like, I've doubled my value, I'm gonna sell it for $1 million. His basis was $500,000, okay? When we talk about exchanges and we talk about strategies, right? Kicking that, I know you're right in front of the pole, love, I'm sorry, I keep coming over to get you. When we talk about strategy and we're talking about kicking that can down the road, there are different strategies I can apply to exit, okay? But if I'm building a portfolio and we're talking about building generational wealth, the step up in basis is the foundation to that, okay? That previous example, my basis was 1.1 million, right? I'm scanning the, Kenneth, you wanna be my child today?
Sure.
I'm gonna pass you on some real estate. So that piece of real estate that I had a basis of 1.1 million, and if I sold it for 2, I'm taxed on my gain of 900,000, right? From 1.1 to 2, now that's if I'm just selling it, I'm not exchanging it, right? In exchanges, there's something, we call it swap until you drop. When we talk about generational wealth and that foundation, when my assets pass on to my heirs, let's say you're my son, Kenneth.
Yeah.
When he inherits my real estate, his basis is the value at the time that he inherits that property. Think about how powerful that is. When I say, I know, Kenneth, so if I pass away, and you inherit that property, your basis, all that,
2 million?
exactly right.
Oh, okay.
So if you sold the property the next day, cause you're like, you can't wait for mom to kick the bucket, you're not you don't have a taxable gain.
Oh, okay.
But, and when I say this foundation of general wealth, it's important for us to understand how real estate passes on, right? What people are working towards when they're buying and selling investment property. If we don't understand our clients' goals, we can't help get them there, right? So think about how powerful that is. Now, Kenneth has a decision to make when he inherits my property, right? He could hold on to it. He's like, Mom was a badass. Sorry, I cussed in your training room. He's like, Mom.
I might have a few times
Okay.
as well.
I was raised by a Marine. I have to like tamp it down sometimes. So.
They're used to it coming out of my
Okay.
mouth.
Okay, good. So think about that. You could be like, wow, Mom really did me a solid. Okay. You can hold on to that real estate now. Now his basis started from the time he inherited the property, right? Now he can build on that. But I handed him an asset with no tax bill. Now that's different if I gift you. If I gift you, I'm not giving you that benefit, okay? And there's a really big difference. But it's important to understand what the step up in basis means, right? There are a lot of hotshot 1031 guys on social media. They do these rooftop coffee chats in New York City. Have you seen those? I know. And they talk about generational wealth, right? Folks that next generation, they're very aware of how these strategies apply, okay? So we've already touched on this, 1 for 1, I can diversify, I can consolidate. But it's important to note, if I added Kenneth on to the title to that piece of real estate before I died, he shared the same basis as me. I did not give him generational wealth, I gave him a tax bill, okay?
Right.
It's a very important consideration when we gift real estate, when I add you onto title, and it's a very common issue investing in what we do. Yes.
Is that the same with family trust? It's considered inherited
Yeah.
instead of,
The step up in basis with assets, you mean? Most assets, sure. Your trust, but your trust is actually your instruction to the government as what to do with these assets. Right? Your trust, so you're gonna hold vesting, you're gonna hold title to your real estate in your trust, right?
right?
And then that trust is your instruction with the government to pass that piece of real estate on to your heirs, right?
Okay, yeah.
Right?
Yeah.
And then your trust, when your heirs inherit the real estate, that's when they receive that step up in basis benefit,
Okay.
okay? It's best when your clients inherit real estate for them to have a professional appraisal done. Most of them forget, and then it's a couple of years later and they call me and they're like, I inherited the property a few years ago. And I say, well, call a broker, okay? A professional broker's opinion can also be in lieu of a professional appraisal, but it's always best for Mark if they actually go hire an appraiser, okay? So when we talk about value for value, when we talk about basic requirements, right? It's important to understand what these concepts are. If I want to fully defer, if I'm selling real estate for $1 million, I need to go buy real estate that's equal or greater to $1 million. I can buy down in value, Mark. I could sell for $1 million, and I could buy something for $800,000. I'm gonna pay tax on the $200,000 in value that I did not replace, even if that value is debt. Okay, I know it's called debt relief. It's because we're layering a real estate transaction with a tax deferral on top of it. Okay, so a partial exchange, buying down in value, is the same as retaining cash, Mark. And actually, on our forms, when your client opens an exchange, and we send them the exchange agreement, there's a significant spot on there that says, do you want to retain proceeds from the exchange? And they would fill out on that form, oh, I'm gonna put $50K in my pocket. And then we instruct escrow, and at the close of escrow, there's 2 disbursements. One to IPX, and then one to the client, for whatever they're retaining,
I have a
okay?
question.
Yes.
So let's say there's $1 million, right, in an account. You spend 900 on a home.
Did they sell it for $1 million?
Yeah, let's just say you have $1 million in your account, right, from a sale.
In the exchange account?
In the exchange.
Okay, yes.
Can so they buy another property for 900,000, that means there's 100,000 still in this account. Can they take that 100 and buy another property as a down payment?
Absolutely, absolutely. I love that question. Absolutely. I can divide my proceeds however I want, right?
Yeah.
I had a meeting with a gentleman yesterday. They're selling a property in Maui. They're gonna buy 3 houses here in Las Vegas, guys. Think about how much business this is from investors, right?
Yeah.
They're gonna buy 3 houses here, and that's exactly right. They're gonna pay cash for one,
Yeah.
then they're gonna split the balance of proceeds as down payments on those other 2
Got it.
properties.
Okay.
You can divide it however you want. Yes, sir.
So question, so they sell $1 million property, there's only $500,000 equity, and that's what goes to the intermediary.
So their basis was 500,
So-
or their debt? Yeah, their debt.
So, yeah, so they still need to buy $1 million property?
They do. So, and this is, by the way, a fantastic question, Mark, because that goes to this idea of I am replacing the value of my debt. Because there's a different concept, exactly. Value is different than proceeds. So when you ask that question of $1 million, and I snarkily went, did they sell it for $1 million?
Right.
It's because in my world, when we say value, how much did you sell the property for, right? Market value, the meeting of the minds, right? That is the value, that's what determines value in real estate, right? What can I sell it for, and what are you willing to buy it from me for? So when we say value, if I sold a property for $1 million, that's the value that I need to buy at, okay? Even if I have debt, because my debt is part of my value, that property is worth $1 million whether I have debt or not. right? So replacing debt is part of that formula. So I'm buying equal or greater in value, I'm putting all my cash.
Yeah.
And now again, I'm talking about 100% deferral.
Yeah.
Equal or greater in value. All of my cash is going in and I'm replacing my debt, right? Go ahead, Ken.
So is this the reason why that Hawaiian Capital is buying 3 is to get to that number?
Exactly right.
Okay.
And actually most investors, they're gonna buy up in value by about 300,000.
Okay.
When we talk about this idea of I'm holding on to 100% of my equity,
Yeah.
most investors are gonna leverage that to buy up in value. There are very few clients that we work with that work at this minimum value, okay? If I'm selling property on one side of town and maybe buying on the other and I don't wanna reinvest cash or add cash, into the purchase, I'm probably gonna stay at my mark, right, and defer my taxes. But most investors are building, right? So I'm gonna sell one and I'm gonna buy 2 or 3 or more. But that debt component is very confusing for your clients. We explain this constantly in my world. Value for value. Because your clients call and what they say is I have 500,000 in proceeds. And what I say is, how much did you actually sell the property for? Okay, and then we lead into value for value, okay? I wanna talk about length of ownership. How much time do I have, Mark? I don't wanna go too over.
Whatever you need,
I always go over.
whatever you need.
I wanna talk about length of ownership because this is a really important topic to understand. Some of you have heard over and over and over again, 2 years. You have to have held the property for 2 years. That is not accurate. What matters in 1031 exchanges is intent, okay? And we actually just sent out a really big marketing piece on this to help clarify. When I say intent, and I'm gonna draw a line. I don't know why I'm drawing a line right here, but I'm drawing a line right here. The general part of 1031 code, when it talks about how long I have to have held the property, it depends on my intent, and there's nothing in that code that says 2 years. It says I need to have demonstrated my intent. And the reason that's important is you don't wanna stick 2 years in your mind and then go on a listing presentation and Richard and they go, oh, I've owned the property for 1 year and 6 months. And you don't wanna say, no, you can't do an
So
exchange.
how do they show their intent?
Great question. Renting it, I have it advertised for rent, right? It's my actions speak louder than my words. I have a great example. I have a gal who bought new construction. She'd been under contract for quite a while. At the time she closed escrow, she had about 100,000 in built-in equity already. Demonstrated intent, she had it advertised for rent. She had actually received applications for rent. She was processing those. She received an unsolicited offer on the property. That is a valid exchange. Marketing the property is different. Marketing the property turns her into a flipper. That's a different business model, right? But an unsolicited offer, the IRS can't say you can't sell your property and it doesn't qualify. I demonstrated my intent, right? So my whole period depends on my actions that I took. On the other side of that line, when we start talking about conversion, right? When we start talking about I'm gonna move from California and move into the investment property I bought in Nevada, now the code is very, very specific. I can't move in before a 2-year mark, okay? So different sections, that general section has some nuance that related to intent. The conversion areas are super specific and there's no give on those. And my point there is just have that in your mind, right? Again, we're kind of myth busting. When you go on listing presentations and you think about all the myths in the 1031 world, that's what your clients are gonna ask you. They're gonna be confused about proceeds. They're gonna be confused about like kind, right? And so these concepts are like, I can come to the table and be a little more powerful in that discussion, right? We've already touched on like kind. Like kind means real property held for investment purposes for any other real property held for investment purposes. So I can sell a single family home, I can buy a commercial apartment building, I could buy industrial, a little gym, by the way, guys, I can sell land and buy an income producing property. A lot of folks in Clark County don't know that. That's a great part of the market to go generate some business from. It's a super simple message, right? Did you know? I can help you sell your land and you can go buy something that'll generate some income for you. And think about how much equity there is in land in Clark County right now. That's a great way to think about new business. Yes, sir?
Is a business property like kind?
So the real estate portion is, but the business portion is not. So there's something we call mixed use, okay? I can have both.
That's what I'm referring to.
Exactly right.
I'm gonna have a restaurant in my property.
Yep. So the restaurant is not part of an exchange, but the land itself would be, okay, and the improvements would be. So in the contract, you would have to have a separate value. I'm selling the business for this much. This is how much my business is worth. This is how much my real estate is worth, okay? I love the question. Think about guys that own car washes, okay? Gas stations, right? A lot of those folks don't know. I can split between the two. I love the question, thank you. DSTs, I'm gonna touch on quickly. Delaware Statutory Trust. The reason you should have these on your radar, these are fractional interest in larger pieces of real estate that are being sold to your investors. These are 1031 opportunities. And DST companies are really, really aggressively marketing to your clients. And what they're doing is they're sending out information and they're saying, hey, you're old. Sell your rental property. That is, they're targeting boomers. I'm being sarcastic. They're targeting boomers, okay? They're saying, hey, we know you don't want to manage your real estate anymore, but you can't afford your taxes if you divest out. They are telling your clients to sell the rental property on the corner and invest in DST properties. It is long-term passive income. Think about how attractive that is to baby boomers, right? I had a client a couple of years ago, a couple, they're 85 years old, came to this country with absolutely nothing. They sold a $50 million piece of real estate. And they're 85 years old. They put $25 million into passive income. They want to sit back and collect that check. And the reason it qualifies as like kind is because I'm deeded into a portion of real property within that building that is different than a REIT. A real estate investment trust, I'm buying a stock. That doesn't qualify for 1031. And a lot of agents, the reason I always include DSTs is that have it on your radar, guys. Have it on your radar. Develop a relationship with a financial advisor. I do a lot of business back and forth with those financial guys because they are also telling their clients, you're old, you don't want to manage your real estate anymore. I have a solution for you. And you can sit home and get a check, and they're very attractive. Have it on your radar so that you have the solution to that problem when it comes up and you're in a listing presentation, right? You're trying to get them to sell, and they're like, I don't want to be a landlord. You're like, well, I can still help you sell. There are other alternatives, okay? So I touched on this a moment ago. Flipping is a different business model than holding investment real estate, right? When I said intent, okay, my intent is demonstrated by my hold, okay? Flipping is a different business model and there is no hold, right? I'm buying real estate, making improvements, selling it for a profit. I can have both, okay, in my portfolio, but flipping doesn't qualify under 1031 deferral, okay? Mixed use is essentially what we were just talking about, okay? It can be a business, it can be a business, it can be a duplex that I live in half of it, right? When I say mixed use, when I say use of real estate is how am I utilizing it? Am I reporting to the IRS that this is my primary home? Okay, that reported use attaches it to that 121 deferral. My reported use of an investment property, hey, this is my rental property on the corner, here's my rental income. That reported use attaches it to 1031 deferral code, right? I can have both uses within one property and apply both codes. Okay, the duplex is easy math, which I like. If I live in half of a duplex and I rent half of it, when I sell that property, I'm allocating the value just like I would with a business, where half of the value applies to my primary and half of the value applies to my 1031. The 45-day identification period. This is what stresses all realtors out. Okay, I know, it's a lot of stress. I want to talk about real life strategies to get ahead of that. I say to all your clients when they call me and we do a consultation, I say you don't have to wait for the clock to start ticking, okay? Think about that. If you're selling your client's relinquished property, once you get it in escrow, okay, remember we're talking about the property you sold to start with. Once you get it in escrow and you get it through those initial contingency periods, you can leverage that contract and write a contingent offer on what they want to buy. I'm not stepping on your toes, am I, Mark? Very popular strategies, right? The way I think of it is we're lining up our ducks, right? And think about your client wants you to be proactive. The number one question your clients call me when they talk about a 1031, they are worried about what they're gonna buy. They are not worried about you selling their relinquished property. They are worried about accomplishing the buy side. If I don't accomplish the buy side, I have that big tax bill and I've kind of undermined maybe my long-term goals, right? So line up those ducks, be proactive, get them out in the market as quickly as you can, secure the contracts on what they want to buy, right? Think about new construction. Yes, Richard?
I had a referral for a lady who had a 1031 exchange, and she only had 7 days left, and she hadn't identified the property yet.
Oh my gosh.
And I didn't know if I was gonna take it or not. I was like, so I just had that conversation with her. I'm gonna try everything I can,
Yeah.
but there's no guarantees, and I don't want you to be upset with me if you can. And actually ended up finding her property, we closed on it, and a bunch of pieces came out of the property that we did afterwards, commercial pieces and everything, so.
You're amazing.
We're able to get it under contract adequately.
And by the way, she's a lifelong client for you now.
Oh, yeah.
You are literally a hero because you solved her problem. And clients that wait like that are not proactive, it becomes very stressful, right? We can only counsel people so much. I love that though, right? She'll come back to you over and over again.
Done
So-
plenty of leases on all their properties, all the renewals I've been doing them all, so.
Oh my God, I love it. It's amazing. It's what was that?
I was just saying that those leases are nice.
Absolutely. Well, the 30-year ground lease, by the way, I skipped over it in lifetime because I don't want to get too far ahead in time. But the 30-year ground lease actually qualifies as real property. And so, yeah, so these are really broad concepts. People think they learn everything about a 1031 when they go sell, buy, 45, 180. There's a lot more to it that you can apply to be successful with different kinds of clients, right? The identification rules, okay? 3 properties. In residential transaction, guys, 99% of the time in residential transactions, you're applying the 3 property rule, okay? That means I'm gonna sell and I'm going to identify 3 properties. The goal would be to have what I want to buy under contract and in escrow before day 45. And then maybe I have the 2 that I'm gonna buy, I'm still gonna give myself a 3rd backup, okay? When you get into commercial transactions or higher dollar transactions, I should say, you can apply the 200% rule, which means I can identify more than 3 properties, but I need to be aware of my 200% value, okay? When I say residential transactions and we stick with the 3 property rule, because if I sell a property for $500,000, my 200% cap is only $1 million. I'm not going to be able to identify more than 3 without exceeding that mark, right? So value is important when we talk about these formulas. Okay? I'm gonna touch on this quickly, because right now, a lot of clients aren't sure what they're going to buy, okay? They go, well, I think I wanna start an exchange, and they're kind of on the fence. They're not really sure what's happening out in the world. People don't like chaos. Investors don't like chaos, they like stability, so they can make reasonable decisions. So right now, there are a lot of investors who are like, I'm going to start an exchange, but I don't know if I'm going to identify. If I don't identify, Richard, money goes back on day 46. Think of it as a tipping point, okay? Some folks feel stressed thinking about an exchange or how do I find that property. Think of the 45 days as a window. I talked a lot of your clients into saying, hey, start an exchange, let me hold your money for 45 days, and you use that window of time to make a decision. If you don't find something, no harm, no foul. You're still paying us, that's not what I mean by no harm, no foul, okay? You're still paying us the $1,000, but those proceeds are going back to your client on day 46. So it allows them a window of time to think about what they want to do, okay? I wanna talk about vesting really quick, and then we'll talk about reverse exchanges and we'll be done, okay? Does that work?
Yep.
Okay. I'm sorry, it's a lot of information. Absolutely. Hopefully we'll do a couple of CE classes and dive in. So when we say taxpayer, remember in the beginning I kept saying taxpayer. Who's the taxpayer associated with that property? It's the taxpayer that's doing an exchange. It's the taxpayer that needs to sell and buy real estate, okay? A single member LLC is not usually a separate taxpayer than me. A lot of your clients hold real estate in their trust. Your trust is not a separate taxpayer from you either, okay? Until it's irrevocable, okay? So what that means is you have a trust, think of a ladder, okay? You're at the top and you're the taxpayer at the top. You're filing your personal income tax return, right? Your trust is on the next ladder, part of the ladder, the next rung. But your trust doesn't file a separate tax return, right? But it's an entity that you've created, okay? Are you still with me?
Yes.
Okay, the next rung could be my single member LLC, also not a separate taxpayer from me. Okay, so when your clients are like, this is how I have it vesting, we're always asking, who's your underlying taxpayer? The vesting is a key part of exchanges, especially when we start to talk about reverse 1031 exchanges, okay? Has anybody heard of a reverse 1031 when I say that? Okay. Has anybody worked on one or just kind of known about them? As long as you have the strategy, right, and know that it's available, I think that's really helpful. I wrote that one. It's an opposite of a forward. And I'm being a little sarcastic here, but we're really gonna flip everything on its head. We've been talking about a forward moving process. I'm selling property A, I have my time frame in between, and I'm buying property B, okay? Think about your clients that come up on the weekend from California, and they're out there wasting your time, right? That was a knowing smile. And they're just kind of tire kicking, right? And they're, but if you show them that gym and think about maybe it's their future primary, if you show them that gym and they go, oh, but I haven't sold anything yet, the reverse exchange solves that problem for them. You can sell them the replacement property as step number 1, okay? I see confusion, I know. Brent, are you familiar with, you said you were familiar.
Yes, I'm aware.
Okay. Okay, so when I say buy the replacement property first, that doesn't surprise you at all. Okay, so let's talk about the process, okay? Because I saw the surprise on your face, right? Think of exchanges as a scale of complexity, okay?
But they also have to have the capital to do it, don't they?
Well, yep, and again, we're right here, you've got to have the funds to buy, right? But I can get the funds from anywhere.
From a loan or anything?
Absolutely, bridge loan, I can pull out equity from my primary home, I can borrow it from Brent. I don't care where you get the money.
I got $10 billion, I'll loan you money.
Nobody does. Well, here's the thing, your clients lie to you about how much money they have.
No.
Okay, yeah, they don't lie to me, because I'm a problem solver. So when I say to them, and I actually had this happen recently, guys, where the client called me, and she was kind of she had already written the contract for what she wanted to buy, and was on a deadline. And I said, well, do you have the $2 million? And she went, yeah, no problem. I was like, sweet, let's do it. You have to have the money or the ability to acquire the money because the money is gonna flow in a circle, right? So when we talk about what the process looks like, the foundation is that I cannot hold title to the property I'm selling and the property I'm buying at the same time. I cannot be entitled simultaneously, Kenneth. Okay, so what we're gonna do, we're going to insert a title holder, okay? So we call it an EAT, an exchange accommodation title holder. That's how you know we employ a lot of attorneys, okay? But we think of it as an LLC. IPX is going to create an LLC. And we're going to insert that LLC as the title holder at the buy side at the close of escrow. We're using your client's money, okay? However they came up with the money, but we're solving that problem. We're acquiring the property up front. So the LLC is acquiring the title. They're not holding title simultaneously that way, right? Because they still haven't sold anything yet. So we call it parking the title mark. Your client has immediate economic benefit of owning that property. That means from day one, even if I'm not on title, through the triple net lease and no cost, my client is immediately renting that property. My client has the immediate economic benefit of ownership. So you have closed that gap tremendously. Income producing property, you acquired it as step number one, and they're getting income, okay?
What are the fees on this going in reverse?
Fees? No, who asked fees? Everybody? Okay. There are a lot, okay?
Yeah.
So a regular exchange is $1,000. We're gonna start the scale on reverses at 6,500, okay? And I don't have the conversation with your client about a reverse until I understand what's your basis and what's your taxable gain. If your basis is 500,000 and you're selling the property for $1 million and you have a taxable gain of 500,000, it is a no-brainer, okay? That's what I say to your clients, okay? And when I say no-brainer, because think about the tax liability on that 500K,
Yeah.
and maybe they're not selling in Nevada. So solutions to hold on to my equity are way, way, way more valuable, okay? So and the fees go up to 25,000. We do what they call non-safe harbor reverse exchanges. Those are tax court rulings at this point, kind of a foundation. 18-month exchange periods for 25K. Think about all those commercial buyers and sellers. They love those because they can accomplish the goal, and 25K is nothing in that scale. We have to understand the scale of liability to understand the value of what we're talking about here when we come with a solution. Was there another question besides the price over there when you guys all, no?
No, I just said it was that just sounds really complicated.
It is complicated, but I want to remind you, we're going to have attorneys working on that file. The attorneys are drawing the paperwork.
Yeah.
The attorneys are guiding your client through that process.
But,
Yes.
But as a rule of thumb, you might just want to let your investor know and just sort of give them that idea. And then
Yes.
contact them with Sarah, and Sarah can really.
Yeah.
We don't have to be the
voice
expert.
for
Sarah's
you,
the
have to be
expert.
the expert. Be the source of the source and not the source.
I love how you said that, and that's it
Very good.
exactly. Come with the solution and you're the hero, right? You don't have to be I'll be the bad guy. Okay, be like, here's 50 pages of legal documents for you to sign. But this process will solve their problems. I love how you said that. And then think about those time frames. Look, now I have 180 days to sell my relinquished properties, okay? Think about how powerful that is. I'm in the middle right now of a very complex transaction. It's a combination forward exchange combined with a reverse exchange. I know, I had a gal, she went under contract last June on a house with Pulte here, 1.5 million. She had 3 properties to sell. She only sold 1. So she only has 500,000. We have 500,000 sitting in her exchange account. There's 200,000 of built-in equity in that Pulte home. There's no way in heck she's letting it go. So she's coming to the table with $1 million. We are combining these strategies at that combination. Think about how incredible that is. At the close of the Pulte home, Now she has another 6 months to sell those other 2 properties. Then those proceeds will flow through IPX and reimburse her for the $1 million that she put up front to buy, okay? And then we're deeding the property over to her or her trust, okay? But these are problem solvers. That's what these are, guys, okay? Richard.
Just another thing, if you're taking a listing from an investor, it's important to mention to them something about a 1031 exchange, because it could bring some liability to you at the same time.
100%. I'm always so glad you're here. By the way, you're so valuable in the conversation. No, because I know. Was that too much? Was that too much? I like him. He's nice.
No,
Was that too much? Look at.
Hey, speaking of emails, I got a question.
I love that, because by the way, when they call and you haven't mentioned it, and nobody told them to open and change before the
You
close.
know how long it's gonna take me to deflate that ego now?
They're mad at you. They're not mad at me.
That's all right.
And you can hear the spit hitting the phone. They're
You
so
wanna be as good
mad.
as me, that's the only issue.
Because they say exactly that. They're like, they knew I was buying they knew I was doing an exchange, or they knew I was selling investment property. Yes, Brett?
I have a question.
Yes.
Is it possible to get a list of guys that are in 1031 exchange that have a short time to accomplish it, and for leads to call them and try to help them find a property?
Well,
Is there a lead sheet available?
no, there's not. That's a great question, because most of them already have representation.
I know.
right? No, it's a
Some of
great
them, well,
question.
commercial guys typically, not always do. Commercial guys are like, hey, whoever brings me the property, you know.
Absolutely. Think about that marketing on the front side of getting the listing of what they're gonna sell. Because then it's multiple transactions, and you're already in, and you've already created that value
Right.
of who I am, and I know
I'd
what I'm
ask,
doing.
I just.
No,
I'd
I
ask.
love it. The other thing I get asked a lot is, do you have a forum that lists the properties that people are trying to sell, or how much money people have to spend? And 1031 exchange data is very confidential, so
Right.
we can't produce an open forum, but I get the question all the time, because I love how you're thinking, how do I get the business?
Yeah, because
That's-
I've
yeah.
heard of stories where guys that were in it, they had, like you said, they had 5-10 days left. They're
Yes.
buying properties they otherwise wouldn't buy just to avoid paying taxes.
100%, you've gotta move money.
Yeah.
That's what matters. It's not about buying the perfect house, and that it was a great example. It's not about buying the perfect house. It's about moving money, and that is the number one priority for investors. We talk about the DST. Think about the DST as a boot solution. If I sold for $1 million and bought for $8 million, there are solutions so that I end up with zero liability. But you're right, investors are worried about moving money. I wanna follow up, just any questions, and we will holiday. We didn't get into the primary discussion, but everybody knows your clients can buy a future primary, right? I can sell investment property in California. I can buy something here that would be my future primary home, okay?
Thank you
Gotta
very
wait
much,
to-
Sarah.
Thank you, Brandon. Yes, sir.
Are you considering doing CE?
I do, and actually, we just
We're gonna
coordinated
schedule
that.
Yes, this is
Yeah.
One
too
question.
important for CE.
Oh, I so appreciate it. I have 2 separate CE classes. We'll get them on. I have an introduction and then an intermediate, which is really the deep end of the pool. Yes, sir.
Can they purchase international on 2 property?
No, only Guam and U.S. Virgin Islands.
Okay, just those 2.
Yeah,
okay.
not even Puerto Rico, which I find odd.
Yeah,
I know, I'm like, why not Puerto Rico? But I do a lot of exchanges back and forth with Guam, which sounds weird, but think about military guys
okay.
that go buy investment property. I actually had someone a couple of years ago sell 12 little condominiums and buy a beautiful house on St. Thomas. I'm pretty sure he was not following the limited use rules for vacation rental because he kept sending me photos. I was like, Tom, why are you there? Okay. But great question, and I get that question a lot. We don't have reciprocal international deferral code. Brent, I wanna make sure I went through any additional questions you had. I saw you making some notes. I wanna make sure if you had questions, I answered those for you.
I got your number. I already put it in my phone.
That was like a threat.
Yeah, exactly.
It sounded like it.
Call me, I would love to earn your business as a resource, Richard.
Absolutely.
So yes, we're gonna get her in to teach a couple of different
Yeah,
CE
I would love
classes.
to. I would love to have a CE class in that.
Awesome, thank you so much, I appreciate that. Yes, sir.
Do you have international reciprocal with Costa Rica?
No, unfortunately
There are
not.
50,000 Americans living in Costa Rica. I was
Yeah.
there last year. I thought
Costa
I was
Rica,
walking
Panama
in
City.
the middle of American City.
You know what's crazy?
Yeah.
Okay.
I spent most of my professional career in Hawaii. I started in development management in Hawaii. I had an incredible number of friends that moved from Hawaii to Costa
50,000
Rica.
people
Yeah.
in Costa Rica.
Exactly, exactly. I'm
So-
so glad you were here. Thank you.
Thank you.
It's a pleasure to
Thank
see
you all so
Sorry I was
much.
late a little bit.
You'll be great.
Good, good, good.
Thank you.
Thanks, guys.
Good, very
Thank
good.
you so much.
Thank you.
Oh my gosh,
Great
you're
information.
amazing.
Great
Thank you. Thank you so much for all your time. I appreciate it. Yes.